There's a few trends that the auto insurance industry has started to implement and started to realize there's some major things that are going to change in the future and some price changes that have gotten even better. I actually got this article from a company called CarPro, and I'm going to use some of their notes because I like the way that they did this. This is from LexisNexis, which is an insurance motor vehicle report company. So they pull your data as far as like claims, tickets, what's called a clue report. And it's one of the companies you would go to dispute something that you didn't have on your record that was there that wasn't supposed to be there. So it's really good information from some pretty reputable companies. And they say the claim severity, so the severeness of a claim, has increased for bodily injury about 9.2%. And I can see that partially because we are a lot older of a generation. The baby boomers are getting older. They're more likely to get hurt in an accident, and the medical has increased from all of the tariffs and all the things that are happening. But in general, that severity has increased quite a bit. And I think it's going to probably increase going forward, which can make a little bit of an issue for insurance carriers trying to build the pricing for their product. Property damage didn't go up much, it's 2.5%. I would expect that to happen in general. We've had some really nicer cars come out, and so you're going to see that increase. The rate increases have begun to ease and they're slowing down. That's one of the beauty of what is we've predicted in the past, and we said in 2025, the middle of that year, going into 2026, we're going to start to see those rates slow down, and some companies have even lowered their rates. So if you are looking for a company to go with, I'll put a link in the description below where there's some options for you. The benefit of that is because they're all starting to level off and some of the companies that haven't raised their rates are coming up to par. Now we're going to have more of a competitive industry, and that's going to benefit the consumer at the end of the day. Still not there. It has gone up about 10 to 15% where it was 15 to 30%. So we're still seeing some rate increases with some companies. As I said before, some are going down, and it just depends. There's product models being rewritten and algorithms being redesigned based on that product model that the companies are looking for. The fourth trend is profitability is increasing. And this is what we talked about in the past, where insurance companies may be sued for something like this, but in general, the companies are making money again. And if that happens, that's creating that market to where insurance may reduce the rates. People might get involved with some legal disputes, and it might be a government thing where they're wanting to keep insurance companies on a level to where they're not making too much money. So because of that benefit, it is being more of an industry to where people want to be involved. And that's a big piece to helping the actual satisfaction and the claims and all of those pieces that make up the industry successful, not just the pricing. And yes, I get part of that is because people are shopping, and that's actually the sixth, I think we're on reason, is it's the all-time high for shopping. If you're an agent, you're realizing that on social media, it's one of the best places to market, mainly because people are looking and asking for where can I get better insurance? Where can I get cheaper insurance? Where can I this insurance? What happened with this? And there's all of these scenarios that you can be an advisor for and help people with. The end goal, obviously, with any agent is that they're shopping with you. That's one of the reasons I put the link in the description below. That is an option. So if you are looking for insurance, there's places for you to go. Because it's at the all-time high, 45% of policies in force are being shopped at the year end or at renewal. I'm seeing that now. I've got customers we've had for 3 or 4 years, and their prices have increased. They're starting to catch up where the prices are, and they don't like it. It was already tight with the prices they were, and now that they're feeling some of the squeeze from some of the policies catching up, now it's where we're reshopping a lot more customers, but there's a lot more people looking. The seventh is EV. Electronic vehicles are becoming, there's no reason to even go into it. EVs are great. Eventually they're going to drive us, they're going to fly us, all the Jetsons movies and all the things, but they're very costly. They're in test modes right now, and they're not quite at the level that EV needs to be. Your battery goes out after 8 to 10 years or 20 years, whatever the case is. A lot of people are staying away from some of those. I think Toyota came out with a water-powered engine, so that might be a benefit later, but now how much does it cost to repair? So all of those pieces in insurance are following EV very closely, but they're not necessarily jumping on the bandwagon. Tesla has their own insurance because people couldn't afford to insure the Teslas because insurance companies are a little bit scared, or they just don't want to be part of the EV model yet to where it makes sense. Even Tesla has started losing money on their own insurance and having to raise the rates because of those reasons, because the risk is very high. The last and eighth reason that the insurance industry, or trend that the insurance industry is having, is the older generation, what we call a longevity customer, are starting to shop more often. They're starting to look and realize that the loyalty that they may have had sometimes is gone, or that they thought they had isn't there. All of a sudden, companies are re-inspecting houses, there's one tree hanging over their roof, and they're instantly putting cancellation. Now, can they fix that? Yeah, your agent can get involved and do all those things. But in general, that is starting to become a trend to where your older generation is now open to looking at other options for insurance, as the direct agent slowly is starting to die off, to where your State Farm agents were or are the main point, or the Allstate agent is only an Allstate agent. Your companies like Liberty Mutual used to only be Liberty Mutual. They've created another company. They've got Safeco. They've got National Gen 360. Gen 360 is Allstate's. State Farm, I don't think, has one yet, although I wouldn't be surprised if they don't come out with one. But in general, there's been a lot of different changes that a lot of these companies are realizing. Looking at independent agents has been one of the more beneficials to any company. Those are the major trends. What am I missing? Is there something that you think that the trending is changing that we're starting to see in this market today? I'm Mark with Think Insurance. I'll see you in the next one.